Excellent. I don't get to do a countdown of 3, 2, 1. This is more like Wayne's World here on the Independent Investor channel for you old school folks that used to watch movies without special effects. Man, Wayne's World definitely felt in that category. If you guys could be so kind, some of the early folks, thank you, Bob. I just saw good audio. I needed to check that. Been taking a little bit different style with the videos that I've been uploading to the channel. You guys have seen that. So I hope you appreciate that. I think it's a lot more interesting than watching me come on here and talk for 10 or 15 minutes. I'd rather just show you what I want to show you and take you into some of the number of different platforms. It really wasn't until I started doing that, until I realized how many different brokerage accounts I'm using right now, and fulfilling a lot of different strategies with those brokerage accounts. And I really want to be open with you guys and show you how I'm going about doing that. For you guys that are new to the Independent Investor channel, this is a live stream that we put through every Friday evening. You guys are going to find that I am not a financial advisor, nor do I pretend to be. I do have a regular job, and I do not do YouTube for a living. However, I have invested trial and error for most of my life. Most of the lessons that I've learned in the stock market have come from the school of hard knocks. And I say that tongue in cheek. Honestly, I don't apologize for folks that get involved in the stock market and are willing to evolve and willing to initiate maybe a new perspective on the stock market and give themselves a chance to learn what it is that works in the stock market and what it is that may potentially not work so much. So I do have some new folks in the group here, some folks that come in every Friday. And first and foremost, I'd like to thank those loyal subscribers that come in and support the message every single week. Honestly, that's kind of the fuel that keeps my fire going. In attempting to turn back and stoke the dialogue on a topic that is typically somewhat faux pas, I am hard pressed to find good conversation, especially with my friends and colleagues. Everybody knows that it's typically my favorite topic, and I'm not one that only talks the talk. I do walk the walk. Obviously, the portfolios were slightly volatile this week. I know some folks are posting here in the community about their weekly gains. That's awesome. The stock market can be a little bit, or have some attributes, just like a hobby can. All right. So I totally encourage you guys to follow the stock market as if it were a hobby. I can tell you that weekly gains are not something that I typically pay a whole lot of attention to. Not to say that you're not right or wrong, but you know, it's the times like these when I'll typically put my attention somewhere else. Okay, and I think a lot of you guys would be best served if you've come to the Independent Investor channel and you've sought out some validation for yourself about how exciting and rewarding the stock market can be, only to find out that there's a potential for volatility. And if this is your first taste of how drastically violent volatility can be, take it like a grain of salt, all right? Or a grain of sand, really. This, you know, coming into a group like this and understanding maybe some of the drawbacks in some of the portfolio may be able to help you. And use it as a learning tool as well to capture or further define your risk tolerance to the market as well. I mean, I was down just over $800 today, and for you guys, you might be working with portfolios to where you haven't made $800 all year. I'm adjusted back in one day, $800, and you guys saw my post on that. I'm fine with that. I mean, I was down 1,800, probably more, because I was actually engaged this morning in an obligation and I wasn't really thinking about it. But when I did check it for the couple seconds of monitoring, because I was curious, I did know, watched a little bit of the pre-market this morning and was able to determine again that we were in for volatility, all based on China talk at this point with the tariffs, etc. I don't typically get into the details of how I feel about that, nor do I think we should approach the stock market and try to react to those geopolitical things that are going on. I really think that, an Apple's an Apple computer before it reported a great quarter, and the day after, when it gave all that profit back. I was able to work a swing trade with Apple this week. It was a good one. $500 is what we rendered on Apple, only to give it back, to be honest with you. I worked it twice, so I did quite well with the swing trade, but got caught up in the downturn. I wanted to up my position. I had 11 shares in Apple, and I wanted to up my position in the technology sector as a whole, but I did not want to expose any new money to any of the social media companies, Facebook being my absolute favorite. And there was a comment that came through the Facebook group by one of my very loyal subscribers, and I'll address her comment now. It was really good. It was from Sarah, who was a little bit apologetic for taking some profit in Facebook. And it was awesome. I think myself and Brent from the Financial Investor hopped on there at the same time and said, don't ever apologize for taking profit. And if you guys are sitting on some positions now in the growth category, it may be advantageous for you, if you've had a nice run up in some of those names, to take a look at those. I've parlayed all my growth positions. I set nothing on any growth. I have no growth in the portfolio from what I can determine. I don't believe that I do. Most everything is built around a dividend philosophy, and that's what I want to do. Dividend, fixed income, and cash is really the bulk of the makeup of my portfolio. I'm not really that heavily weighted in a lot of the the index funds or ETFs at this point. I know that it's something that I recommend all the time, and for beginning investors, I make that recommendation to look at the prospect of diversified S&P 500 investing, because that's what I would have done if I had gone back and had it to do over again. That's what I would have done. And quite frankly, that's actually what I'm looking to do, is strategically reallocate the portfolio to be a little bit more passive, but I don't want to do that now. All right. So I have two choices. Either I can kind of wait until this market comes in a little bit to a little bit more of a conducive buy point, or I can scale into the market. Now, keep in mind, I do have some exposure through an S&P 500 index fund in my other retirement account. Okay, so it allows me a little flexibility to know that I'm already exposed in that manner. Gives me a little bit of flexibility to kind of wait this out a little bit. And if I feel like I've got a good inject point, I may take my first stab at the S&P 500 through VOO, which is my favorite S&P 500 ETF, to get me that broad exposure that I preach all the time. I really just am really sold on the idea of building that passive base and having the majority of my holdings in those passive assets. I know there's a few folks here who have talked about their renderings in the M1 account. They're quite good. M1 Finance is really one of those good options to where you can put it asleep. It's kind of hard to expect that you're going to go in there and tinker with that portfolio very much. So that's a big positive. And I'm finding that through my experience as well. I released my video this week on the sector spider ETF, and I had a really good comment come through on that video talking about how good they thought just investing in the S&P 500 was probably the optimal way of investing. And then what I was disclosing is just investing in the individual sectors, which would include some of the mid cap, some of the small cap stocks within some of the sectors. And probably thought that was a very interesting way of entering the stock market in a passive and diversified way. So for the folks that are on M1 Finance, I don't expect that you guys are trying to finagle in and out of this market. Again, I typically become somewhat disconnected when the market does this. And for what it's worth, I leave your comments and let me know what you guys are thinking, if you think you've made a mistake. But remember, the prospects of not being an investor are far scarier than the prospects of becoming an investor. Okay, you can take that to heart, because I wholeheartedly mean that. I don't necessarily justify at the expense of being financially disciplined with your approach. I would never ever advocate for substituting that discipline for not investing. Okay, and it'll be easy during times like these for people to come on and say, "See, I told you so. You guys are crazy," and it takes certainly some investing discipline to weather through these storms, but it's somewhat unnatural. Investing is fickle in this manner, in that there's not a lot you can do to prepare for volatility. What I mean is, when the volatility strikes, it strikes fast and it strikes furious. Now, the things that we talk about on the channel with regard to things that you can do through preparation, whether it be build an unnatural amount of cash on the side. Again, that should really be your proof to yourself that you can start building that base and start building that opportunity for yourself, proving to yourself that you can pay yourself. Okay, and that should be a discipline that you hold, maintain, and evolve with the rest of your life. Okay, I don't know how many old dollars I have in my savings account that have been there my whole life. I don't know. But I can say this: I am a saver, and I have adopted the discipline of saving. And that discipline through savings helps immensely when I'm trying to counterbalance and make sense of the stock market. And that is really where I put a lot of the value. I typically don't resort to looking at, well, I'm down 2%. It'd be kind of interesting. I may do it after the live stream. And for you guys that do it, I love you all the same. I think it's great to know how you guys are performing in your portfolios. That's wonderful. But keep in mind, all the things that we look to control before volatility kicks up is the key. Looking to seek that strategic advantage in the stock market. Most people think that they're getting that strategic advantage in other ways. I contend that opting into an account that doesn't charge you anything and provides you that free opportunity to invest in the stock market directly is in fact your strategic advantage. Because when the stock market goes down, it doesn't discriminate. It takes everybody down with it. All right. It's not like that there's pockets of the market that are exempt. Warren Buffett will not be exempt from a downturn in the market. And just like you might hold a sizable account in the stock market or a small account in the stock market, you're not going to be immune to it either. The question becomes, what are you going to do to prepare for the eventual volatility? And these are some of the things that we talk about. We talk about them calmly. We talk about them rationally. And we talk about them responsibly, because the stock market is not a game. There's a reason why I come on here every single Friday and talk about money. Okay? This channel is not about self-improvement through fitness. This channel is not about spiritual enlightenment. Okay? This channel is about money. It's about money. but it's more about the fundamental and psychological approaches to preparing your money to build over time, to provide stability over time, to provide a windfall account in the event that things come up in your life and you've got those funds available to you. And it's relative. Don't sit here and come to the channel of this community and say, I can't do it. I don't make enough money. I don't really have a whole lot of sympathy for that, because here's the thing, your boy Ryan, the guy that you come on here and watch every Friday as a loyal subscriber, I've been there, done that. I have. I've been there and I've done that. Been in hawk with the IRS 2 times, not once, but twice, only to get myself out of that trouble twice. Okay. Got wrapped up in penny stock trading, lost $3,000. Okay. So for you guys that are sitting there in the audience and you're like, wow, he is a human being. That's wonderful. We don't have to cut him open and determine that he's not a Terminator. All right. He is in fact a human being. Let's enjoy the live stream for the next couple hours and have some fun, figure out how we're going to deal with the volatility, and we're going to do it free of emotion. All right. Welcome to the channel. Cool stuff. There's a slight announcement that I'd like to push out through the channel. My good friend with Average Joe Investing, Mr. Dave, he ended up in the hospital. So best wishes to Joe, to Dave, who ended up in the hospital, and some interesting posts through Facebook. I don't want to get too detailed there, but all the best wishes certainly to him and his family. Get well soon from the Independent Investor channel. You know, it's odd how you feel like you get to know certain people and you expect certain people to pop in, like Bob and Eric and Dave, and I see all these guys and all good. And of course, the one and only Dave Whitaker. Like, you know, I expect to see those guys. And Dave's really been there with me from the beginning, starting, grinding. And again, anybody who starts a YouTube channel and grinds out those first few subscribers, only to scratch together a few folks that are interested in what you have to say, all the power to you. I tell you what, there's not a lot of folks who are willing to share what it is that we know, willing to humble ourselves, willing to grow with our audience, willing to accept some mistakes through the channel. And I just wish him all the well, certainly. So send your wishes to Dave as well. Hope you have a speedy recovery and you make your way back into the Independent Investor channel forum here, man. You are missed. All right. I do have one of my good friends in here as well. I've got Brent with the Financial Investor again, who's probably batting 1,000 for joining the Independent Investor live stream. Certainly doing some really cool stuff, really doing some more cutting edge stuff than me as far as Instagram posts and some of his updates that he does a really good job in putting a pretty cool message. I saw him pop on there with what it looked like was his kid, and he's teaching them young, and that's a lesson in and of itself, to get these kids financially savvy as young as we can. The real trick is having them appreciate it. And that's the real trick. The value of hard work cannot be underestimated in this life. That's one of my fundamental feelings. And anyway, welcome to Brent as well. I had a couple other. I got Stock Market Investing, who's a channel that I need to check out. I was able to do a little bit of review on JMac Investing, who's a frequent visitor of the Independent Investor channel live stream. And Mr. Jason's cool, man. I checked out the channel. So again, I think he popped in last week, and I just asked everybody if they do have a little bit of time to go in there and help support. It's kind of cool. It seemed like a regular guy, which is kind of awesome because I relate to that. But he did say a few things during his videos that resonated a little bit with me. So pretty cool. Congratulated him on reaching the $20,000 portfolio mark, which is really cool. I don't mention those things for people who don't have those milestones to look at and say, wow, thanks a lot. It's the opposite. You have to understand, I offer those things not out of fear of success. I need to have folks look at financial success as more of a priority in your life, okay? It's urgent. And let me be more specific. The wealth gap between the wealthy and the non-wealthy is continuing to get worse. And if you guys can think of a better way than empowering individual investors, which takes a lot of power and profit away from the financial institutions and puts it in the hands of the people who should in fact have it, then I'm all ears, okay? I'm all ears. But the situation is not getting better. Now, this is part of the fuel. I enjoy coming on and seeing, familiar faces that come in the loyal subscriber group. But I think some of those folks resonate with that very message. And it's urgent. It is. The wealthy are getting wealthier and the poorer are getting poorer. And that's why I talk about the relativity. If you're on that cusp and you're not making a whole lot of income every year, the one thing that you can do, that you do have the power to do, is to parlay some small aspect of whatever inflow that you do have and pay yourself first. I don't care if it's 10 bucks a month. I don't care, okay? But you have to look at the value of that $10 being paid to you as opposed to justifying not paying yourself or not becoming a participant in an investing program. And it could just initially be a savings program. It could be, and I know people come to me all the time and they're like, Ryan, I don't have any money. I have too many bills. I have too much rent. I have too much this and too much that. All right. There are differences between reasons and excuses, and I will let you guys sort those out, okay? I cannot solve the world's problems, and I cannot solve your individual problems. What I can do is pose real solutions, that of which I've used myself. When I say 10 bucks a month, I mean it, okay? When I started with 25 bucks, $25 a month, and I would really challenge each and every one of you guys that are looking to start to reevaluate how in fact you got your start. If you know somebody that's struggling along, that's looking for the light or looking for some empowerment for themselves, bring them onto the channel, man. We'll help them out. We'll help them find those few dollars that they may not have understood was there before, because nobody's ever sat across from them and told them that they can do it. I can tell you right now, guys, the situation is urgent and we need to take this stuff seriously. We really, really do. All right. So again, I'd like to welcome everybody. I'm going to cruise up to the top here. It looks like we've got, a pretty robust group that's popped in here this evening. I just want to scan through and make sure that I've got all the channel creators identified. If I did miss you, I do apologize for that. I will probably get you through the scan and through the review of the questions, okay? And I do want to just make sure and address everybody. This is my opportunity to kind of acknowledge and turn back the folks that are coming into the group here. Of course, Mr. Bob Wright, who's usually the first one in here, says what a week it really was. It was kind of unexpected. It was really unfortunate because the Apple quarter was nothing but perfect. Just a phenomenal quarter, and it gave you just a couple hours to think about it right at 217. I put in my sell order at 217 and was able to take a 25 share block of Apple and take that profit right off the table. That was awesome. But too bad that they had to report with this type of thing going on. I just think that the president thinks we have leverage right now. Win, lose, or draw, that's what's going on. I don't typically think that I can control what it is that our president does from day to day. I typically focus on what I can do to take care of my family. and my independent investor channel community. So those are things that I can control. Again, being very, very practical with my approach. That's what we're going to focus on. But it really was a week, really was pretty violent toward the tail end with the sell-offs at the end of the market. But anyway, Bob says I'm still up and picked up some positions early on Wednesday. I buy with the day traders with limit orders. The market usually dips early in the day. Certainly some opportunistic perspective there in the market. I like to hear that. Again, I was just opportunistic with Apple. I'm going to be just open with you guys. That's what I did. Certainly doesn't mean that you need to trip over yourself to go and throw money into the stock market. I would probably encourage you to look at kind of taking a pause here and letting your portfolio work without going out and just getting crazy. Nothing will ever be problematic for you if you just end up showing some patience and some reserve when the stock market does that, guys. That's what I do. All right. If it continues down, I will stop looking at it. I really will. And hopefully that kind of helps you a little bit in the perspective. I've got a dude from Silicon Valley. That's kind of cool. I don't know if I have a connection. I probably do. There's a lot of community subscribers that come onto the channel and hit me up. But it's kind of cool having a contact from Silicon Valley. If you're still in the group, hello to you. That's pretty cool. I'd like to know what you do for a living. If you work for Google, that's pretty cool. One of my favorite companies, no doubt about it. All good. Great friend of the channel. Hello, everybody. Catch you soon. So she's making her way in here. Financial investor. Yeah, looked like short covering toward the end of the day or something. Not, yeah, absolutely. You know, when things do that, you're not going to make any sense of it. So it's best to just kind of walk away and live to fight another day. In the stock market, it happens. I've been through this many, many times. And if I can impart to you that, there will be many, many more opportunities for you guys to work through some of those, not good times in the stock market. It seemed like last week we were in celebration mode, and now we're in support group mode. So I'm just kidding. We typically try to find a middle ground with regard to our money discussion, and that's really where I want to keep the focus. Where it should be, and that's keeping an even keel with your investing perspective. And if you can keep that even perspective or even keel perspective on the stock market, you can also have a lot better perspective on how you approach your life and how finances fits into your life. And hopefully for a lot of you guys, it isn't the total picture. Hopefully you guys are working toward the potential of having this stuff really well tuned and really polished over, and that way you don't have to focus on it so much. All right. I hope you guys enjoyed the portfolio review number 1 that I did. You guys understand that's half the portfolio. So I'm going to roll out portfolio number 2, which there are no duplicate holdings in portfolio number 2. I'll be rolling that out this week, so stay tuned for that. Those are just cool videos. I like them. Hopefully you guys appreciate them. The M1 Finance pie that I build for you guys to replicate my portfolio holdings in Bank of America. That's kind of a cool idea. Hopefully you guys appreciate that, and it gives you the opportunity to look at the product, and you could actually invest in my particular portfolio for $100 if that's what you wanted to do. I know a few folks are really interested in the fixed income portfolio that I've so graciously shared with the group there. The link is toward the top of the community comments, so please look for that. I didn't have a chance to throw it at the top of the live stream. So look for that. I've got my fixed equities with the allocation adjusted to the actual dollar amount to the $30,500 that I got in that fixed income portfolio. So I've adjusted those 7 holdings to really be reflective of what I actually have in there. So please enjoy that. That's free of charge. You guys understand the motive behind that. The motive is very, very simple. I can sit here and talk about, and I've made videos on my fixed income. I just think it's a lot easier if you can go in there and look at it and extract whatever value, if there is value there for you to be had for yourself, okay? And I'm a visual learner. I like to look at that stuff, and if somebody has something to teach, they can walk me through it. But how cool is that, guys, now with M1 Finance, the ability to share those pies and share those investing ideas. I've got a lot more to come out with. I know if Brent is listening to me, don't jump the gun on me and start firing away and taking my ideas. I'm not just kidding. But I do plan on doing portfolio review number 2, as well as some of my optimal portfolio that I feel like maybe a new investor could look at as a potential investment pie. Okay, and if you wanted to go with their expert pies, you certainly could do that. They post those on M1 Finance, and it's kind of like a real sleepy way of investing, just putting your money to work in their expert pies. You could do that. I typically like to take a little bit more strategic approach and a little bit more ownership over what it is that I do own. You have the ability to back test those pies that are available through the research tab on M1 Finance. And I would encourage you guys to do that, because the flow of information is freaking exciting now. It's so amazing. The prospects of how much access you have to the market now. And again, it just comes back to my point at the top of the live stream. Anybody who's not taking advantage of that is just crazy. You're crazier than me. And if this volatility kicks up and we're down 10%, we're going to have people coming onto the Independent Investor channel. I know it, saying I'm crazy. Well, I'm really not, because at that time, as the market becomes more volatile, I'll be focusing on other areas of success in my life. I won't be focusing on the stock market not currently working at a current juncture of time. I won't be focusing on that. I'll be focused on other project building initiatives. Okay, I won't be sitting there dwelling over the stock market. Why? Because I have fair expectations of the market. All right, I would expect you guys to have fair expectations as well. Now, I didn't write the expectations on the board to talk about expectations of the market as a whole. What I did is I put it on there to talk about expectations when you enter into an equity holding, whether it be a single stock or you enter into an equity holding that is in the form of an ETF or an index fund, okay? This is a golden rule, and I'm going to push it out to you guys if you're still listening and you're still with me just over a half hour into the live stream. This is the funny thing about tuning into my channel. After 2 hours, it's going to be, I'll be tired, I'll lose my voice. But during the course of any given live stream every Friday, I'll give you little tidbits, or I'll say something on the fly, as I don't script these, okay? But when I push out these little tidbits, I encourage you to listen up. And I can't tell you how many stocks I bought initially that go down. Your strength as an investor is going to be how you deal with that adversity. And it's not adversity anymore for me, but for a new investor, it can be a real barrier. Like, oh my goodness, of course it went down. I'm the one who bought it. It's personal, right? I made the stock go down because I bought it. I'm a loser. The stock went down because I'm a loser, all right? And typically people will follow that curve down and they'll watch it go down. And as it starts to go down, or as it's gone down over time, they'll try to deploy some discipline and hold it, but it'll continue to go down. The trick is what it is that you do about it. Now, the majority of the time for folks that are starting out, the most prudent move that you can do is nothing at all, okay? But I talk all the time about nothing at all is kind of a static way of making sure that you don't sell in the red. Okay. It's the whole, is it really down or have you really lost? So for you guys that are identifying 2% down in your portfolio, you haven't lost a dime. Okay. You've never lost any money until you hit the sell button. And I deal with this psychology all the time for new investors when they're like, I'm down $7 today, Ryan. You know, what's going on here? This is not what I signed up for, man. And I ask rhetorically back, what is it that you expected? Silence, right? No, fair expectations. But the strategic application is to take a good name. Let's say Pfizer. Okay, perfect example. Ran up pretty well, took some profits, ran back down into the low 40s. I took a restab at the position, half of the position that I sold, 50 shares, and it's continued to drift lower. What do? Are there things that you can do to make that a winning trade? Now, I would insist that the focus should be on the 4% dividend that Pfizer pays anyway. That's good enough justification to do what it is that I talked about with regard to just holding through and weathering a specific storm, okay? But what about the prospects now, as most of you guys have the solution of being able to invest in the stock market free of charge, free of restriction, like you don't need anybody's permission. You can go in there and buy 1 share of Pfizer or 10 share blocks of Pfizer as you see fit anytime you want, free of charge, free of charge. Now, depending on the broker that you're with, if you guys are with some of the major brokerage houses, obviously it's not going to be advantageous for you guys to do that because it's going to get expensive. But for the free brokers out there, like M1 Finance and First Trade, the folks that are exercising those accounts, you have the ability to accumulate share at your leisure. Okay, so think about the prospects of that. And as that stock turns down and you continue to hold, imagine putting a couple buy points on that slippery slope. Okay, now we're talking Pfizer as an example, but this is really speaking to the fundamental root of people's psychology when they buy a stock and they have the expectation that it's automatically going to go up. Okay, it typically doesn't. You typically buy that on its injection point and it will end up fluctuating down. Maybe it's down 4 or 5%. Now what do? Okay, and if you don't trust what I'm talking about, or you don't relate with what I'm talking about, monitor your stocks, okay? Monitor a name like Intel. Intel just went through this, went through a swoon, went down into the low 40s, and has come all the way back into the 50s. Now it's got caught up in this volatility. I believe it's sub 50 now, all right? But it's a perfect example of one of those stocks to where you could have looked at and said, wow, I owned 5 shares of the stock. I really could have added maybe more to it on a strategic buy instead of go through this self-deprecating, oh, is me, Intel's going out of business. I've got news for you, it's not. And added a little bit more to my position, right? Lower that cost basis, okay? So make sure that you're having very fair expectations about the positions that you're entering into. And in nowhere in that exercise did I talk about the prospect of selling. What I talked about was the prospect of strategically buying more, because we're not talking about getting the right entry point and selling for a small profit. That's not something that I advocate for on the Independent Investor channel, because it's extremely hard to scale. It's extremely hard to teach people, and it's extremely hard for people to succeed at. All right, so we don't talk about that. All right, but just because you buy a company like Home Depot or a Costco doesn't mean that you're going to be exempt from looking at that particular holding and having it drift lower. It's how you handle that drift that is the very, very key. All right, so that's a big takeaway from tonight's video, is having fair expectations. Do not look at your holdings short term and expect short-term validation, especially in this volatility. as it's kicking up and it's becoming more apparent. I just think over the last month, we were kind of in a euphoric phase. I didn't want to pop y'all's bubble last Friday when everybody came on and was like, whoopee, yippee, and there's streamers going off everywhere. It's hit me in the face. You guys are like, it's like, okay, yep, I know, great. This is the very definition of euphoria. Let's get back to reality, okay? There's nothing wrong with acknowledging a little bit of success in the stock market. And I've said this many, many times, I wouldn't be in the position that I'm in now without the power of compounding interest, without the power of dividends, without the power of the stock market and dollar cost averaging. But I can't tell you specifically where the turning points were, or the perfect trade, or that injection of luck that I had. I can't tell you that. It's always been much more pragmatic over the evolution of where I started and where I am now, and my builder's approach to building wealth. That in and of itself is the psychological reason why I'm building some level of success in the stock market. All right. It was never one given time of, oh my goodness, I'm so glad I made that one move. It's made all the difference. No, no way. Now, if I were going to chalk up the very best thing that ever happened to me in my investing career, bar none, and there's not even a distant second, it was discovering self-directed investing. That's the number one thing that has really helped me stay grounded. When I'm in the Bank of America building downtown Manhattan, which I had the opportunity to do over the last, about a couple of years ago, last year I went, and the year before that up in New York, I'm looking around and I actually felt above it. I really did. And that's what feeling empowered is all about, is that you're exercising your right to participate in the stock market without any interference. And that's a beautiful thing. When we're talking about people who are making 15, 20,000 a year, and they're not bringing in a whole lot of surplus capital, it's imperative that we take and we liberate those dollars the very best that we can. And those are real solutions that we're pushing through the channel, through the proper account, and the products that just make sense from a cost perspective. Okay. I'm not talking about the magic mix of stocks. I'm not talking about that. There's a lot of different products out there that will get you to your end goal, whether it be your single stock based on your profile or your passive products based on your profile. Okay. They'll get you to your end goal if you're patient enough and let those products work. But the real key in my evolution and success in the stock market, if I were to go back and earmark when I was 34 years old and was introduced to self-directed investing, that was the very turning point in my life that's made all the difference over the course of this bull run, or this bull market that we've had since 2009. And I hope that you guys look at that opportunity the exact same way that I did. All right. Good stuff here. I've got Christopher Blaine here, says, hey, let's go. I don't have a seatbelt in my chair. I don't. However, I did take his advice, and I've got apple juice I really enjoy. It's been a busy week, so it always helps. Nightcap is good. I'm a big fan of apple juice, so he says, fill up that scotch glass, Ryan. I'm not sure what he's talking about there. Bob Wright says, I thought it was bourbon. Wise man. Good stuff. I've got Victor Hernandez. Hello. Hope everyone's having a good Friday. Bit of a rough week. You guys are kind of conversing about some of your portfolio percentages. Again, guys, don't get too crazy about that. Focusing in on short-term validation as to why you're doing. Don't think that you're doing the right thing. Know that you are. Financial investor is trying to get a rise out of me by offering this comment, Jeremy, how to prep for a recession. If you buy my course, I'll be fine. That is lovely. I don't I don't watch other YouTube channels anymore. Sorry. My focus is on you. My focus is on my program and building my project and empowering my individual investors, which was the goal of the channel from video one. If you don't believe me, go back and watch it. I'm dead serious about that. Perhaps maybe it's the old dog in me that doesn't need to be taught new tricks, but I don't need a kid telling me how to invest. All right. I've been around the block a few times, and I dare say that the fundamentals that I gravitate to have been proven to work in the stock market. So I would rather adhere to those principles as opposed to throw darts. All right. And that's about all I'll say about it. But thank you for getting a rise out of me. I appreciate it. Okay. All right. Yeah, I've been asking. So I'm trying to find my first question here about stock market investing, maybe something. I usually get a ton of them that pop in toward the end, and I usually run out of time. But I switched my TSP to the G Fund a few weeks ago. I did the same. I did half, actually. Now, the G Fund is a good fund, 3% guaranteed money. It acts like a money market. I know it's not. I know it's a government-backed security account, but get to run you that 3%. And you guys notice now that portfolio that I shared with the Vanguard Holdings, the G Fund that Brent is talking about there for government employees. So please bear with us while I touch on this topic a little bit. The pie that I shared in the fixed income on there is running about a 3% dividend clip with about a 4.5% appreciation rate. So pretty good combo there. Remember the capital appreciation on M1, when they do the back testing, it does not account for dividend paid in the portfolio. It'd be too complicated. It'd be a nightmare. So they don't do it. But I think you're smart. I did the same thing. I like the idea of having that pension, half of it in the G Fund anyway. I may end up opting for, now I've got part of it in the S and the I Fund as well. So I've got it split up a little bit. So if I feel like I get a real nice downturn, whether it be 20, 25% in the market, I'll rotate that back into the C Fund, right? But for right now, contributions are going into the CS and I Fund, and the G Fund pay dirt. The dry powder is sitting there good to go, ready to go. I think that's a smart move, Brent. Good work. Some strategic positioning I don't think ever hurt anybody. I think that's smart, real smart. All right. You're really cranking out the videos this week. Not really. I got Bob Wright, who's given me a little bit of encouragement. I do like that. I do have a ton of topics to crank out. What I do is I do videos when I want to. I do not sit down and try to manufacture content. I will not do that. I think that's a recipe for driving yourself bat crazy on YouTube, because I guess if I was pressured and I was making tons of money through YouTube, it might be different, and I might just stay up all night and not ever sleep. I'm not really interested in that lifestyle, to be honest with you. I like coming on here. This is a lot less obtrusive to come on for me, and hopefully it's not for you guys. There's people who can't make this live stream who watch it every single week. And for those folks, I'm in debt to you. I really am. I just think I believe in good and evil, okay? I believe in right and wrong. And I think for somebody like myself to come on and offer my ideas and perspectives is a rare thing. It's a rare thing. And I think a lot of people do relate with my approach. They know I'm not an elegant stock technician. And do you need to be? That's a rhetorical question I'll leave for you guys. Am I a stock analyst? Nope. Am I a financial planner? No. That's the very industry I'm going up against. And I'm right. And anybody who has the courage to come onto a social media platform where you know that you may have 1,200 eyeballs review your content, maybe every word that you have to say, looking to add some retort or response to what it is you have to say, that's where I give myself a little bit of credit for coming on and facing the music a little bit and fighting for people who I think need to be fought for. And the idea to go a little bit further is to give them a little bit of encouragement so they can fight for themselves. There's no doubt that income gap is very real. We need to start fighting collectively. I'm doing my part, and I'm sharing you guys the template to success to help you guys maybe define a path for yourself that you wouldn't have discovered without the assistance and the support of the Independent Investor channel. All right? All right. I'm down 2.2 this week, he says. Brent has given his portfolio rundown. That's okay. Good stuff. Let me cruise down. Tell everyone why I switched my TSP. That's good. Greg, are you in? Now, Greg's in Southern California, I think. He's one of the lucky ones. I've got a good friend here. Greg Cammie and Tim Tellers are both in the community here, same location. But Tim says that Wealthfront lowered their high-yielding savings to 2.32 APY. Scribner did a video on this, guys. He talked about the highest interest-paying, high-yielding account right now being Betterment. And I hate to offer that curse word through the Independent Investor channel. You guys almost pulled the plug on me for putting that affiliate link on there. That is no more, but might not be too bad of a prospect. I guess, you know, the competitive nature of those high-yielding accounts is pretty cutthroat now. So right now, I guess they're the flavor of the month. I don't know, guys. It's wonderful for you guys that want a little bit more performance out of your cash holdings. Certainly a high yielding account is a great way to do it. I'm going to tell you, I don't do it. I don't care. The money that I have devoted to a little bit higher yield to outpace inflation comes in the form of my fixed income portfolio, that of which I've shared with you in the group here. I think there's probably a lot of benefit. And I think you guys could probably scrutinize that decision of me in that I could probably take some of what I have built up in the cash because I'm not making any money in there. But the liquidity means everything to me. And if I've got to give up even an iota of liquidity to make 2.52%, I would just rather leverage that money and go ahead and put it into a Vanguard product that I've noticed has now lowered their fees to 0.07. You guys can back test me there. But they've moved from 10 basis points down to 0.07%. Okay, so good news there. Obviously, the race to zero is providing better opportunity for us, the little people. The little people, you betcha. Hey man, I'm proud to be. I'm not a big fish. That's okay. I'm happy, which is worth its weight in gold. All right. So I've got the one and only Doug Whitaker in the group here. I'd kind of be interested to know your twist on how you're handling the volatility. I don't know. You seem like Cool Hand Luke to me, and seem like you've got a great perspective on the stock market, and at least what little bit we've conversed through the YouTube channel. I'd love to have a beer with you and really get down to business. But you know, it's tough. It's tough on these new investors. It really is. But great to see you. Great to have you back in the group and joining in on a little dab of discussion here on a Friday evening. Pretty cool stuff. Yeah, so Betterment's coming up in the high yielding. I think it's the high twos, closer to 3. Like I said, Scribner did a cover on it. I don't do that. I'm not affiliated with any of those folks, nor do I plan on doing that. I'm satisfied with the 2 affiliate programs that I do have. And I've just started adding that to the Independent Investor channel live stream. I hope everybody is acceptive of that. That's quite frankly the way that I make the most amount of money through YouTube. YouTube is pretty stingy, to be quite honest, with the ad revenue. That's fine. I don't want to bite the hand that feeds me, but quite frankly, if I have a product that I like that fits well on the channel, I don't think it's too much that we layer up on those affiliate opportunities. And we've done so with the two, M1 Finance and First Trade. Both accounts I personally use. I have monopoly money in both. Just kidding. It's real. It's real money. So when I declare those portfolios to you guys, you're seeing the real deal. I've got the First Trade video coming probably Sunday evening, so it's already filmed and ready to throw on there. So I'll be chronicling the First Trade portfolio. That's the $5,000 portfolio. So again, 50% of our goal toward the 10,000. You guys see here the majority of my discussion revolves around your opportunity to reach that first $10,000 milestone, not about pursuing pipe dreams of becoming millionaires. Okay, I don't need to waste anybody's time. Your time is important, just like mine is. So we're talking about realistic goals, and those accounts provide those opportunities for you to do that because they're free of fees. And you can seek out your access to the stock market the same way the major brokerages provide that access. Okay, you're just doing it free of charge. Pretty cool stuff if you think about it. All right. So Greg Cammy says hello. Bob says good audio. Good. I was messing with it to actually do that picture-in-picture videos that I've been doing this week. I like that profile. I really do. For you guys that are in the community, just under a half hour, and under an hour, I will put the plug out there that I'm actually considering doing some merchandise on the YouTube channel, Independent Investor channel. If you guys know anybody, all right, that may run a print company, something like that, it's all about connections for me, and I'm a pretty cool fella. I would love the prospects of getting some designs made up with regard to starting with some hats and some t-shirts to start. Nice stuff. I'm not screwing around with garbage. I don't even like the word t-shirt. I guess that's maybe 2 words. I don't know. I don't like it. But if you guys have any leads for me or any ideas that may potentially help me stand up some merchandise on the Independent Investor channel, it's leather hats, with maybe some standout logos, the I squared, and maybe some t-shirts with some faded logoing, some sharp stuff, some stuff that really looks good. Maybe stuff that I can some workout gear. I really like the Under Armour material, that type of approach, something like that. If you have any ideas, don't hesitate to shoot me an email and just reference the inquiry through the live stream on Friday, August 2nd. And just an avenue that I'm thinking about pursuing. So I wanted to get that plug in before the first hour was up, before people started leaving, and then I'm only stuck with my loyal family. So anyway, I've got Jared Odell in the group here. Good evening to you, my good friend. Awesome. Great to see you. Another one of those gentlemen that have come into my Independent Investor channel life, that of which I'd like to meet in real life someday. We'll see if we can't make that happen. We'll see if we can't get this project a little bit steamrolling a little bit. You guys know I'm just kind of getting my footing right now, testing to see where the channel could possibly go. I have extremely high ambitions of the channel, and we'll make it happen. No doubt about it. We will be. A lot of people, when they buy a house, they'll look at the kitchen, they'll look at the garage, they'll look at the space, they'll look at maybe having an office, the number of bedrooms, etc. YouTube studio is actually very high on my list, so we're going to do that when we end up settling somewhere, and I stop doing my obligation that I'm doing currently, which I won't get too much into that, but we got big plans for the future. And we'll grow it as slowly or as quickly as the project dictates. And just having a lot of fun with it, trying not to press, and really trying to build it the right way. Honestly, I've said many times, I'd rather have 1,000 loyal subscribers than 100,000 folks that really don't connect with the message, and that's okay. I found out that there's a lot of different walks of life out there, and a lot of folks aren't really interested in the money topic at all. And that's fine. I think there's a lot of people who think they're not interested in the money topic, who are great candidates to become interested in this topic. And then I think the majority of people fall into the category of having it figured out or being satisfied with regard to being conveniently naive with regard to their perspective and approach. And that's fine too. I'm not here to judge. I'm just telling you, this is an avenue that's worth at least researching, and in my opinion, pursuing. But let's take baby steps to start. All right. So I've got Michael Raver in the house. He's popped in and he's yelled America. That's great. This is kind of a worldwide channel. I've got folks that tune in from all over the world, and for that I'm very thankful. I always approach my words that I push through the Independent Investor channel. I want to be a good ambassador of what it is that we represent in the United States and the opportunities that exist therein. Okay. And a lot of folks hit me up and they're like, man, Ryan, I would kill for the opportunity to be able to do what your community has the opportunity to do. Like, they're just like, I get it, man. It's legit. And it is. I'm not doing it because it's not. But different genres, different walks of life, people who will come in and scold the message, not relate to it, blah, blah. You're an idiot. Okay, well, I'm not. But, they feel like they want to make themselves feel better by pushing some venom through. And that's just part of the gig. It really is. It's part of my, stuff I've just got to push through as being a micro influencer. I don't even know what that means. But anyway, I don't even know what criteria does it take to become a micro influencer over social media. You guys have any idea? I don't have any idea. Anyway, it looks like I got to my first couple sets of questions here. I've got Eric Weber in the group here. Welcome to you. Awesome to see you. What's going on, Independent Investor? Thanks for the great info. Yeah, I wish I could render more. My stock pick of the week is Kroger, ticker symbol KR. There's some great info for you. I will tell you, since I can't give advice because I'm not a financial planner through YouTube, I will tell you that I took 100 share stake in Kroger. Valuation traded about 6 times forward earnings, too cheap, paying about a 2.5% dividend. I'm cool with that. About a $20 billion company. And I didn't have any exposure to the grocery space. I think, Walmart would be in my top 3. I do have Target, which I don't typically think about as a grocer, but I do have Target in my portfolio. But I did add some Kroger to the portfolio, and that's actually my pick of the week based on valuation, no doubt. I know the margins are extremely tight with Kroger, and I know groceries and selling heads of lettuce really isn't that exciting. But if you look at the charts, look at the technicals, look at where it's at, look at the support and base at 20, it's worth looking at. And I could come on here and lie to you and tell you I bought 50 shares of Google. That's not the truth. The truth is I bought 100 shares of Kroger. All right. And like I mentioned, I did a little swinging with Apple, and I think I shook out at 37 shares of Apple when it was all said and done. And I'm satisfied. Apple's my favorite company. What they've built with the ecosystem, what they've done with the services business, that quite frankly, if there's no other reason to invest in Apple computers outside of the iPhone, which I don't believe is a reason to invest in it, if somebody came to me and said, I'm interested in investing in Apple because number 1, the services, and number 2, the ecosystem, I would listen. That person knows what they're talking about. That's why it's one of my favorites. And I insist on having a little bit more of my portfolio weighted toward technology. That's just what my risk profile calls for. That's just the way I want it to be. So I typically try to maintain that 19-20% in the portfolio. That's what I try to do. All right. So Kroger's the pick of the week. Thank you for that. Great info. I'm not sure about that. There's a lot more that can just come from awareness. And where does great info get you? I don't know. I don't know if some of that stuff exists, to be honest with you. I think you can be more successful in the stock market by not being the sharpest tool in the shed, but be willing to maybe outwork the person next to you. The value of hard work. Seriously. Might show up on one of my Instagram posts this week. I hope you guys are following on Instagram. I would encourage you to do so. I would consider it a personal favor if my loyal subscriber base would start jumping up some churn on Twitter. I've held a Twitter account for a long time. I like it for my platform. I don't really, it's not my favorite platform, to be honest with you. I don't feel a whole lot further away that I do about Twitter than I do about Instagram. Facebook, I love. It's amazing. And YouTube, I love. I love these two platforms. But if you did fancy kicking over and following on those two social media platforms, certainly helps with the churn. I couldn't be more satisfied with the Facebook group. That's probably one of the most valuable social media platforms that I have, to be quite honest with you. There's more value in that Facebook group. It probably rivals a lot of the benefit that's pushed out through some of the others, Instagram and Twitter. And then, of course, YouTube, I think, is probably the best because I don't do live stream over Facebook. But a lot of the good information gets dropped in Facebook. So just trying to build the properties in multiple facets and deliver the content maybe in a little bit more of a strategic way and a different way. And that way you can consume your content however you see fit. Okay. What's going on? See, purchasing today and Monday for my M1 Roth and individual. Probably not the worst time. Use a little scale. If you're going to drop it in there, go ahead and drop it in there. If you're a long-term investor, I think you'll be fine. I'm addressing John Henderson's question here. Don't have an age and I don't have a risk tolerance, right? So make sure that your goals are in line with dropping it into the fire on Monday and buckle your seatbelt. So hey, listen, the best time to invest in the stock market is yesterday. Okay. I don't fear anything. The work that I used to do in my young life has made me numb to fearing anything, especially something as fickle and shallow as taking a 10-share position in a stock. There's nothing scary in that for me. Nothing. Now, it used to be something to where it was pitched to me as being like something that just only the professionals did. Like, you can't buy Apple stock. You can't do that. Those times have changed. For a lot of people, they'd like to believe that it hasn't changed. And for the financial planners looking to recommend only a suite of mutual funds, I believe in their mind it hasn't changed. But I'm here to tell you through my channel that it is in fact changed. It has in fact changed. All those barriers are dropped. You now have the ability to invest in the stock market how you want, when you want, in what manner you want, in what allocation you want, be any type of profile that you want, and quite frankly, have 100 times more visibility over your accounts than you ever did going through a third party, ever. You can have the amount of access to your accounts that you define. My accounts are a thumbprint away. All right. And I want that for everybody. I really do. I think it's powerful. It really helps me sharpen my awareness to the stock market and what's going on. It really does. And I want you guys to really understand and align yourself with what's possible. Again, trying to put ourselves on the front of that wave and not be on the backside. All right. And I think there's a lot of people out there who think they have it licked, and they do not. They don't. But again, coming through and watching a Wayne's World style money discussion on the Independent Investor channel is not something that the sophisticated would even do. So, no, are you kidding me? Financial advice through YouTube? That cannot happen. It can. and we're actually proving that it can. It's a perfect delivery conduit. It's perfect. All right. I love when stocks go on sale. Yeah, valuations got pretty rich. I mean, we were pushing 20 times in the S&P 500. I think that's astounding. And I do think the last couple months have just been kind of stupid, to be honest with you. The stock market was going up for no good reason. It's just been silly. And it does that. It does that. When you think you've got it under control and think you understand the momentum and direction and where it's going, it goes the opposite. That's just the way of it. Get used to it, guys. This is a beast that nobody, and there are millions and millions of people trying to figure it out. And it's one of those things that can trick everybody. Everybody. All right. The best thing you can do is hold on for the ride and eke out those goals that we're looking for, 7 to 10, right? Dollar cost average, buy when it's down, buy when it's up, okay? Save the fees, dividend reinvestment, all right? Leverage those accounts to put you in the driver's seat and make sure that you are, in fact, gravitating toward the strategic advantage, all right? There's not a self-directed investor out there that does not and can't sit across from me and say, it's nice to be on the team, Ryan. It's nice to be on the team. I feel in my heart that I have a strategic advantage, and it's validated when I look at my statement, because I don't see any money coming out to pay some person, okay, that maybe did or did not help me throughout the course of the year align my strategic portfolio. All right, good stuff. I feel like they need to fall more. I do too. Brent is, again, Brent's got a little bit more bear in him than me. I'm just kidding. I think he's probably about as optimistic in the stock market than I am, but I have a feeling that the stock market probably is going to start. I mean, I've been saying this for a while now, preparing for a little dab of a drop in the market. And for you guys that are starting out, you don't have to do anything. Calm down. You don't have to do anything. Remember, the best thing that you can possibly do sometimes is to do nothing. Okay? If you've got a few $1,000 in a portfolio in the S&P 500, you're good. Start saving that cash on the side. If you're only able to say, wow, Ryan brought up the idea of saving cash on the side, start saving cash. And if you're only able to get up to $200 of cash saved and the market goes down 20%, there you go. There's your opportunity to take 100 or 200 of that saved cash and strategically buy the market, okay? But if you get caught with your pants down and you don't do any preparation because you think that your S&P 500 position is going to continue to go up the rest of your life, okay? Adjust your expectations, all right? All right, put focus on the areas where you can put focus and actually control. And there's a lot of it. There's a lot of areas. I had a great discussion about alternative investments. And the initial alternative investment that came to my mind was gold and silver, right? Traditionally gold and silver. But it was one of the coolest conversations I've ever had. It was with a work colleague of mine, and it was an awesome discussion. And what ended up getting passed, and it was like I'd never thought about that before with alternative investments, is whiskey, Jack Daniels. I don't know. In the event of a downturn, do you think it would be interesting to have a stockpile of that? Now, if you use your imagination, some other alternative investments come up. The ability to produce power, right? The ability to have some property and provide yourself clean water. The ability to produce food, right, through greenhouses, okay? Investing is a mindset. It really is. Stock market investing, I'm going to level with you guys because I love you, is somewhat shallow, okay? You own a very small piece of a company and you hope that you're going to get a little dab of appreciation, maybe get paid a little dab of dividend over the course of your life, and it's going to accumulate some wealth over the course of your life, okay? All that is possible, all right? But think holistically. And I really want to come back to some of this, and there's some things that I won't say through YouTube, but I know there's folks in my community that have imagination enough to kind of get where I'm going with that. Okay, in the event of a catastrophic downturn, or preparing for the worst in an economic downturn cycle, it would certainly be nice to have some of these things put away. Cash on hand, gold and silver, whiskey, Jack Daniels. I just thought that was a cool idea. One of the most recognizable things that have they don't have a shelf life. Obviously you couldn't do that with some of the beer products, but some of the hard liquor, some of the most recognizable names in this world, would be kind of interesting to stockpile some of that stuff. But yeah, think about that. Some alternative investment strategies, some good stuff. And if you guys think about it, throw it in the group. That may be a YouTube video that I come out with just for fun. I think it's a cool topic. I'm not into rare art. I'm into vintage guitars, certainly. But some of those things, to where if you're interested in becoming an investor, but you're not really resonating with the idea of becoming a stock investor. I know people that they're wealthy and they don't have one bit of stock, right? So some really interesting discussion there to be had with regard to alternative strategies. So really good stuff. I've got the tempo guy in the group. What the heck of a thumbnail. Very cool. I was hoping this down movement to enter into an ETF. Certainly, I'd be kind of interested to know what ETF you're looking at. I participate in a lot of the ETFs. SPHD is one that's pretty good. That's the top 50 dividend payers in the S&P 500. It's offered by Invesco. 30 basis points of expense, so a little bit expensive there. Certainly worth looking at the Vanguard product, the VYM. That's an interesting product for a dividend payer. As well, and then VNQ. These are holdings of mine that I'm declaring. I don't have VYM. I do have VNQ. I do have VPU. So on the sector specific side, so real estate through VNQ, and then VPU on the utility side. I have exposure there. Emerging markets as well through Vanguard. I think I bought a rather large position this week in VBR. I think that's the value, small cap value through Vanguard. I did take a position in that. I forgot that. I'm sorry. So full disclosure, in way of transparency, I think I bought a pretty sizable position in the small cap ETF as well. So lots of good ways to get it done. Obviously, my flagship ETF is Vanguard's S&P 500. You could go through Vanguard or State Street or any of the other offerings there. I know iShares has one as well. Those are all comparable products for sure. But you can get it done with those for sure. The Tempo guy, thanks for stopping by. Right on, man. Good to have you in here. I got JG, not JZ, JG in the group here. JG. That's funny. I deal with JGs all the time. It's an inside military joke. All right. Anyway, I like the volatility. Oh, that's awesome. I don't. Unless it's producing some opportunities for us, yes. It's just I don't know what to do when the stock market's this high. I mean, you can continue to fund at the lowest level possible. I'm not being an aggressive investor right now. I'm just kind of like, okay, whoop-de-doo. I'm going to let my positions work, and I'm going to enjoy being an investor every day. That's all I can do. But I think you'll find that I'll be a little bit more worth my salt when the stock market starts to present some opportunities through the volatility that you're talking about. Because I don't mean to make fun. I know exactly what you're talking about when you say I like volatility. I typically would like to see valuations come down. If it just so happens to come through volatility, so be it. And to do so with the underlying economy still strong. Okay. So if we get those disconnects between a volatile stock market that provides some opportunity for entry with the underlying stock market still strong, I'm all about that. Eric Weaver still got some dividends today, reinvested across M1 portfolio. That's really cool. Eric Weaver really hits on a pulse there of M1 Finance. And for those folks that are looking to start a passive approach, man, I'm liking it. I haven't touched my SPDR portfolio since I started it. It's built up quite well. Took a little dab of a haircut today, but I'll tell you what, I've got some capital appreciation in there, and I've got some dividends paid into the portfolio. It's like an 11-headed small portfolio money machine, that's really nicely working for me, and I can't complain. I like it. It's a nice passive approach, very low maintenance, if any. I mean, there's no maintenance to the portfolio. I like it. It's a cool way of doing it. So Eric Weaver offers the picks there on Verizon, General Mills, and AT&T. So good stuff there. I like all three of those names actually for some dividend payers. So great stuff there. A little heavy in the telecom, right? So and I know you know that. So don't just always pursue the dividend at the extent of pursuing dividends. There's a lot more there to be had. You wouldn't invest in Apple computers just for the dividend, right? You'd invest in Apple computer for different reasons, but they did increase. That was kind of cool. ExxonMobil, another example. They reported earnings this morning, and I've been a long time holder of ExxonMobil. We're going on maybe 4 or 5 years in ExxonMobil. Still waiting for that position to pay off. But it's paid me a 5% dividend since I've owned it. Accumulated a lot of free shares in the holding. So it's one of those stocks that's easy to own, and that's going to be a topic of a video this week that I'm going to come out with. Stocks that are easy to own, and you have 3 of them right there, Eric. You really do. I like your approach. Stocks that are easy to own helps you when the volatility kick up, and you can look at your portfolio and say, wow, I'm still invested in companies that I like, and it's easy to be an investor in. Whereas companies like Tesla, those companies are not easy to be investors in. Okay, so just kind of think about that. What are some companies that you wouldn't mind taking into a downturn if, in fact, we're subjected to one? All right. I think we're setting up for more downside stock market investing. Pretty wise comment there. I do agree with that. I think you're right on the pulse there. I do. So just be patient. Don't get crazy. The stock market's going to do what it's going to do. And you need to do what you're going to do. So again, focus on those things that you can do. If you're sitting there focused on it going down, you're probably doing it wrong. Okay, so change your perspective a little bit and look at those things that you can control. If it bothers you, don't watch it. Okay, I watch it because I'm looking at other things. Okay, I'm looking at how I can strategically take positions, and I'm looking to buy the market when it does this. So that's just me, and I'll be wrong with that approach. I've just typically found that approach is I'm in the minority when I'm doing that, and it's typically the right approach when you're looking to strategically buy the market. And the last couple years really hasn't been the best time to be just accumulating stock market exposure, without any acknowledgement to where we are currently. Okay. And hopefully as it does adjust back, those opportunities are going to present themselves a little bit better. Okay. Yeah, David Mathis says hello. When stocks go down, I just buy more. That's pretty easy philosophy. It's not rocket science we're talking about here and drawing awareness to. I don't believe the stock market is something that deserves our fear. I do believe it's something that deserves our attention. Okay. It's very powerful. All right, I got 20 grand in VOO right now. I'm thinking that might be a mistake. Laugh out loud. So JG, it could be heavy-handed. It just depends on what some of your other assets are. I mean, I don't know if you're sitting in a $1.5 million home. The 2020 Corvette got brought up. last Friday, which perked my curiosity. I went on and checked out the 2020 Corvette, and it is sick. It's sick. So I don't know if you're driving one of those. So, I don't know if you're making $250,000 a year. So with that said, from a relative perspective, if you have 20K in the VOO, that might be okay. Okay. But if it's one of those things where that's all you have, it may be a candidate to look at your exposure limit right now, because your admission in your last statement where you said that might be a mistake. Well, I don't know. You've got the ability right now to maybe trim a little bit back off of that position. I mean, it's just an option. Okay, there's no one or other way. It's like the Facebook trade that I talked about with Sarah through the Facebook group. She was almost apologetic to say, I want to take some profits. Maybe it's the wrong move. Be a little bit more, aggressive with your application. And if you want to take some exposure off the table right here, do it. But don't do it at the expense of your total overall portfolio or your total overall financial picture. If you don't need to, and you're driving that Corvette, and you're living in a $1.5 million house, and you've started a portfolio with 20,000, why screw with it? But if that's all you have, maybe you might think about taking a little exposure off the table. But again, that's for you to decide. I think the idea is to talk about different options, to where if somebody else in the community was sitting on 20 grand, what would they do? I know what I would do if it were my only portfolio. I think I'd be tempted to maybe take a little exposure off the table. Maybe I'm a winner, lock in some profits a little bit, still continue to fund the account, maybe look to leverage some of those holdings into maybe multiple holdings, diversify into some other ETFs as well, to maybe give your portfolio a little bit more broad-based exposure within the portfolio. There's some work there to do, but again, it's hard to answer that question or address the statement when I don't have the ability to look at it from a total perspective, right? That's how you have to approach each and every one of those. But thank you for that comment. Helps to have cash for any reason in reserve. That's a wise statement. Right below, Eric Weber says, have a little bit of cash on the side. It's a practice that I've abided by. I learned the lesson very young in my life, where I had every dollar in the stock market, and they did quite well, but I didn't have any money to live on. So you learn that one quick, and I just said I wasn't going to do it again. I wasn't going to subject myself to that type of activity. My exposure to the stock market is indicative of and in line with my comfort factor with regard to my invested capital in the market. And that's it. I'm okay with that. I don't care if somebody looks at it and says, you shouldn't be doing it that way, or you should be doing it this way. No, it's fine. Remember what I said at the top of the show? I'm kind of an old dog in that I've been through it a few times. If it was a topic that I knew nothing about, I would be all ears, but I know a thing or two about this particular topic. Okay. Henry Kwok, BSN, RN. I will start saving 30% in cash for a recession. I think that's smart. And that right there is a really good financial goal. If you want to know how to codify a financial goal, look at Henry Kwok, BSN, RN, which is quite the ticker symbol there, or quite the screen name. That's how you address and put down on wax an actual financial goal. I really like that. It's been a goal of mine, along with a lot of other strategic goals from my particular financial makeup, and it's helped immensely. There are times, very rarely, and I'm very, very aggressive about protecting that cash hoard, whatever you want to call it. I'm very aggressive. I don't justify a lot of garbage expenditures, guys. I don't just justify going out, and the Corvette got brought up last week, and it's like, well, I mean, I could go buy one. I could go pay cash for it. And I was trying to address the comment from the perspective of I want to invest, and that way I can get the 60 grand to go buy the Corvette. And I was trying to draw a distinction between the two comments, and that it would be nice to drive a car like that, I guess, but not at the expense of my program. No way. It's ironclad. There's nothing that will affect my approach to an acknowledgement to how important that money saving piece is. All right. So good on you for doing that. I've scaled in more this week. I probably bought more than I should have. I do have cash, and I'm adding about 600 plus a month. So Bob, that's really an aggressive profile, really aggressive posture. You're really going at it for sure. Again, kind of the same idea from the comment above yours. As long as it's within a relative scale, okay? As long as it's in line. I mean, if you own a property, or you have a property that you have a mortgage that you're not going to have any problems in paying, right on, that's a positive. If the cars are sitting out in the driveway and they're paid for, maybe you do have some cash on the side that you're happy about, maybe that 600 plus a month that you're jamming into the market is surplus. You don't need to care so much that maybe some of those contributions will end up getting consumed. Now, it's buying you shares on the way down for cheaper, but you're not going to be a happy man when you look at the dollar amount, which, again, you have known me for a while. It's not something that I encourage anybody to focus on anyway if they're looking to accumulate a share base of stock. Okay. And I'll be the first to tell you, I think that's awesome. That's a very aggressive funding schedule. It really is. And strategically buying the market there when you're doing that, that's more of a dollar cost average, if I'm understanding you correctly. But you can only win with a program like that, where you are frequently putting those injects of cash into the stock market. I think that's a really, really good way of attacking the stock market. And typically the way that you will win is with strong moves in the stock market. You really got to attack it. And by attacking it, you're not going to be exempt from mistakes. However, you're going to be making strong moves based on unemotional decisions. And typically those are the ones that can work out the best for you, or at least to give you an edge above others that are trying to rely on emotion and instinct to somehow time the market through. That typically just doesn't work out very well for people. Okay. I was going to invest $4K into VOO, VTI, Vanguard REITs today. My test deposits just hit my bank account. Do I just invest now or wait for the volatility to smooth over? I can't provide financial advice through YouTube. You've identified some very, very good products there that are offered through Vanguard, and for that I will give you some real credit. Those are awesome products. Okay. I typically like to look at the VOO and the VTI as individual products. What I mean by that is I don't see a whole lot of reason to have both of them in the same account. As a matter of fact, I wouldn't and don't. Okay, I've personally invested in both of those. I enjoy both of those products. I do invest in VNQ. If you listen to what I said about the Vanguard REIT, I really enjoy that particular fund that represents that out of the 11 sectors. I like the real estate sector, so I get my exposure through that. That's really good. As far as your question goes about how to strategically take $4,000, would really depend on your age, okay, and your risk tolerance. Here's the thing: if you take the $4,000 and it ends up getting cut in half to $2,000, are you going to be able to handle that? And it's a question that I ask rhetorically, and obviously I'm not going to be able to sit across from you and judge your reaction to that, because the reaction comes in two forms. Either you say, "Oh my God, Brian, I wouldn't be able to do that. I wouldn't be able to sleep." Then maybe you need to consider the prospects of scaling that into the stock market in a very, very slow and calculated manner. Now, if you were born in 1982 and you're young, right? I mean, you're a couple of years younger than me, and you have a long investing time horizon, $4,000 in respect to the stock market and investing and building a portfolio. I mean, I'm looking to get you up to the first 10,000 bucks. 4,000 almost gets you halfway there. $4,000 is a lot of money. I don't care what anybody says. But in the investing sense, we're not investing to retire on a $4,000 portfolio. Why do I say that? Because if your perspective is long-term, you shouldn't be worried so much about dropping the $4,000 into the stock market, regardless of what it does from day to day, or regardless of what it's presented over the last 3 days. What you could probably do for peace of mind is introduce small injections of that, $1,000 at a time. Okay, I'm telling you what I would do. This is what I would do. $1,000 to start. Okay, you could even do 10 shares in the S&P 500 and say, you know what, $2,500, $2,600, $2,700 of S&P exposure. Here's my block-based position at 10 shares, right? I'm happy with that. I'm not doing anything with that win, lose, or draw. Now, if it draws down 10%, I'm going to take an additional 500 and buy. And if it draws down another 10%, I'm going to take 500 and buy. Okay, until that 4,000 is exposed to the market. Easy. You guys see my perspective on how I take a number like 4,000 or 40,000 or $400,000. It's all relative. Okay, I treat this question the exact same as if somebody came in and said, Ryan, I have $40,000 to invest into VOO, VTI, Vanguard. It's the same question. From a relative perspective, you divide up the perspective the exact same way. But it is really up to you. I mean, you could win. I mean, what if the stock market reverses and you've got the entire $4,000 in it? You're going to benefit from that. But the level of your exposure in the stock market has to reflect you. It has to reflect you, not me. That $1,000 entry protocol, that's just something that give you something else to think about. And that's the value of coming into a live stream and sitting across from a YouTube fella an hour and 36 minutes into a live stream and maybe getting a different perspective from somebody who's been doing this a long, long time. And you think, wow, that's really, really cool. If I invest my 10 share base, I'm invested, boom, that meets my desire to become an investor. But I also have some of this dry powder over here to where if the market does end up going down, which I think it might, right? And I'm speaking from your perspective, right? So it'll give you those $500 or even $250 injections. And a 250 injection is one share of the S&P 500, which is a big deal. So you can inject those shares, maybe even one at a time, maybe $250 blocks, maybe after 1 month or after 2 months, something like that, which is more of a strategic buying opportunity. And that's a great question. Thank you for bringing it into the group. Really awesome. Great. Good luck to you. Stick with the channel. You know, I don't want to leave any person behind. And if you do end up deciding on deploying a specific strategy, you know, let me know. Let me know what you decided on. There's no right or wrong answer in the stock market. The right answer is the one that makes sense for you. Okay, it's not one that may make sense for me, and I elegantly come on here and pose it to you, and you go out there and do it, and you second guess it because it didn't make sense to you. Okay, that those little bit of strategic plans that you put in place, as long as they make sense to you and you're willing to deploy those plans and follow through, they're going to make sense for you, and you're more apt to stick with them too. All right, thanks for coming into the group. That was a cool question. Thank you. I push about 1,000 into stocks every month, regardless of price action. Well, that's legit. And I would assume you're doing that, of course, in a taxable brokerage account, right? Stock market investing. I'm going to make it a person. That comment right there just got my attention. And I'm going to make a point to go in after this live stream and check out your content. So thank you for that. That's a pretty aggressive schedule, and good on you. That's a lot of people don't have the means to do that. $1,000. I mean, you would agree that's a pretty aggressive schedule. But I tell you what, if you want to be an investor, that's the type of motivation, or that's the type of aggressive program that you have to say, you know what, I'm in. I'm in. I believe it. Think about how much of a portfolio is being accumulated right now. And I hope I'm able to kick over to your channel and see some of that content as well. But I got a pulse of enthusiasm from that comment. I hope it's not, I hope it's from a genuine place, in that you're, looking to value and dividend invest for some of the philosophies that I adhere to as well. I hope we're not going after, some more aggressive investments, especially with the market at its all-time high. If you have the money to do that, right? See, that's how we take a philosophy from stock market investing that says I push 1,000 into the market, and I could say that that's 100% justified, because there's obviously surplus cash there to be pushed into the market, and it may make total sense for that to be going on right now, even at the stock market at the levels that they are. You see the relative perspective there, guys? A lot of you guys will be looking to build up to your first $1,000 in your portfolio total value. This individual right here is pushing in 1,000 every month. That's legit. All right, that's a big aggressive funding schedule. And I applaud that. I like that type of ferocity, because I tell you what, strong moves in the market are those ones that will typically work out for you, honestly. If you've got that money to push into work, I applaud you for it. That's really good stuff. You've just earned my attention on the Independent Investor channel. I'll kick over and try to check out some of your content. I'm surprised J Mac didn't make his way in here tonight, but that was the one channel that I reviewed this week. I thought it was good. Seems like a pretty cool guy, so we can help him get up to that 1,000 subscriber mark, which I believe is where the monetization kicks in, I believe, through YouTube. I don't know. They're so stingy. I mean, it's like they're not making enough money, so they've got to pinch the small creators. But anyway, great comment. Thank you for that. And I will. I'm a man of my word. I'll go in and check that out and see what we're working with there. And that way I can definitely give you a better shot out next week when you come and join the live stream. Good stuff, man. Thank you. Don't forget to hit the like button. Thank you. I think everybody kind of has, no doubt about it. Unless there's 6 people in here that just really didn't like the message, which is okay. I'm learning that everybody is entitled to their opinion. Okay. So anyway, but I love when you have the Friday live streams. Yeah, it was kind of fun tonight, man. And thanks again. It's one of those things that I really enjoy. This is about the most conducive to me on the Friday evenings, and I don't have to. Again, I look forward to it, and if I lose that, then I'm going to lose some of the essence and some of the enjoyment that I get out of the channel, because I don't want to just make content to make content. I don't want to do that. It's a waste of time. All right, I want to make sure that we're getting some value out of it, and I just appreciate the hell out of that, Tim. Thank you. Gary PW, I've got a question toward the bottom of the string here, and it looks like it's going to take us right toward our goal of a 2-hour live stream. That's pretty cool. 2-hour live stream, that's pretty cool. That's cool. Just pat myself on the back for just a sec. Anyway, when we get to Gary PW, I'm down 20 in the last 3 days. What am I going to do? Buy more stock. Absolutely. A plan that has worked over the last 30 years. That's pretty cool. Lot of savory insight in that comment. I really, really like it. That's really, really smart. It's hard for new investors, Gary, to have that perspective. It is. It's tough. It's 20,000 is a lot of money to lose in 3 days. I think I'm down about 4,000 right now, relative in my portfolio. I don't even like to push that out there, because I don't like for somebody to hear that and say, Jesus, even the independent, even Ryan's losing money in the market, man. How, if he can't make money, how can I? And there's so much more of a holistic approach. Nobody's exempt from losing money. I said that at the top of the stream. And I think your perspective on it is, as the market comes down, it's not necessarily the adjusted share price that you're interested in. It's buying on opportunity. I think that's a real key for people to understand. But help me generate and teach that perspective, because I do envision young investors, 20, 30 years old alike, walking around with a chip on their shoulder, and they have that very perspective that you have, that has obviously been learned over the course of your life. Okay. And the big give back there. Now I'm 41. I don't profess to know it all, but I know enough to maybe give back a little bit, or a little tidbit of that perspective there for the younger folks making their way into the community. And I tell you what, the quicker they can learn it, the better off that they're going to be, because hopefully people are able to review that and be like, wow, that got my attention. There's a lot that can be learned there. Thank you for offering it. And thank you for making your way in and sharing your perspective. That's a lot of the reason why I do this, okay? Because I can say in a lot of different ways how I feel to try to drive home the point of what you just did in that comment. But I think it renders a lot more value if it's coming from a collective mindset of approach and experiences. I really do value that, and diversity as well. I think a diverse set of opinions is really worth a lot, coming from a lot of different backgrounds here in the Independent Investor channel. And I absolutely encourage that type of thing. Eric Weber says, for sure, praying he gets well. Thank you for that. I appreciate that. I hope he didn't mind the little call out on the channel. Wish him well, and hopefully he can make it back for sure. I sold Caterpillar before the chaos. It is looking better now. Okay, good. I've just held it. I don't think Caterpillar's going out of business, but anyway, Cat looks like a buy next week. Certainly, I mean, you guys know it's a holding of mine. I think I've got 20 shares or so of Caterpillar. Nothing crazy, but the industrials really does fit into that category of being one of my favorite sectors to invest in. So China is weighing on Cat. I think China may have the potential of weighing on Cat. Certainly. So there's Jason. He just popped in. J Mac Investing. He says, thanks for the shout out. Well, I'm going to give you another one, partner. So I don't know. You just struck me as one of those cool cats that I'd probably like to barbecue and have a beer with, to be honest with you. And what's funny is I watch your channel, and hopefully people come in and they watch my channel and they get the same perspective that we're not stock experts. The experts get it wrong all the time, but I think we're kind of ambassadors as folks that are trying to invest in the market and show people, kind of lead the way a little bit. We're going to have our hiccups and we're going to have our mistakes, but I'm telling you what, guys, anybody who's going with a financial planner, you're not exempt from those mistakes. And if you're doubling up and making mistakes through the financial planner, and you're going and sitting down there and it's expecting them to console you and tell you that everything's going to be all right, you need to pull your head out of your backside, because you're not only losing through those mistakes, but you're getting, it's their job to put on a happy face and tell you that everything's going to be okay. Because when you leave the door, they're still charging you fees. Okay. And for us folks, I was able to review your channel, Jason, and I thought it was cool, man. Stick with it. Appreciate the support coming on to the Independent Investor channel. I really do. I admitted tonight, and I hope I don't offend anybody, I don't watch other YouTube channels, man. They just piss me off most of the time. And again, my focus really does have to be on my group. But for folks like you that actually show a little bit of interest in my project, you betcha. you get my attention, and I reviewed some of your content, and kind of leading the way, man. $20,000 portfolios, nothing to shake a stick at. You should be proud of that, and it's built in a nice way. Really nice passive ETFs with some good single stock dividend payers. Not rocket science, is it? I mean, you don't have to be the sharpest tool in the shed to invest, man. But like I said at the top of the live stream, I think not investing is crazier than trying to pursue this gig of putting together a nice portfolio for your financial future. So thanks for popping in here at the end, man. I appreciate having your support, and it goes both ways. Chris Invests is another one, I believe, personal finance videos. I would assume that he has a channel or something. There's a couple of these folks I need to review. You guys bear with me just a sec, because I'm gonna review some of this stuff. So Chris Invests, and you guys know why I do that, man. I'd help out anybody. I really would. If there's some folks out there now, if you're pushing penny stock investing, okay, I'm gonna block you from the channel because I don't. It's not one of those things that I advocate for. So if I do get a pulse that you're looking to pursue investing that adhere to principles that actually work, then I'm all about it. But thank you for coming in here. I'm going to check out some of your stuff if you don't mind. And then hopefully if you come in next Friday, we do the live stream at 9 o'clock Eastern time. And if you can come in closer to the top of the live stream, I won't be so tired. I won't be so tired. And I can give you guys a proper acknowledgement, and hopefully get some of the community on the Independent Investor channel. You guys are part of the loyal crowd here, and I love everybody. I've had some killer interactions with some of my subscriber group, and I tell you what, I wouldn't trade that for nothing. And so for you guys that come in to the Independent Investor channel live stream and help me support the mission, you're going to get my attention. You're going to get my support as well. And hopefully those guys can kick over and give you guys some love and build that subscriber base, because I think Jason on JMac Investing said, I'd like to maybe make a little dab of money through this gig. You know what I'm saying? Maybe fund up my portfolio. So that was cool when he said that. I was like, hell yeah, that's exactly right, man. Get yours. That's right. It's freaking, hey man, hard work should pay off. I think that's a cliche, a bit of bullshit sometimes, that hard work always pays off, because it doesn't. It doesn't sometimes. But the value of hard work cannot be understated. It can't. I got Dave just popped in, Average Joe Investing. I'm just going to read, just caught up on some of the comments from the beginning of the stream. Thank you so much. Yeah, I saw your family on Facebook, and I didn't want to, I kind of treated you the way I would want to be treated, because if I'm going through something like that, I'd rather kind of maybe just be left alone, because I'd be probably kind of mad and want to get the hell out of there. But get yourself well. It's nice to see you pop in there, man. It's a hell of a way to close out the live stream. So we're all with you, man. We really are. I feel like I've known you for a few years now. I remember when we had the little channels that could, and now I think we're micro influencers. I think. Again, I don't know what that means, but hopefully you got a little smile on your face, man. Just in all seriousness, get your ass well. All right, you're a young guy. You got a lot to give and a lot to offer to a lot of people. All right, so do me a favor and get yourself well. All right, guys. With that. Been going about an hour and 53 minutes. To the channel creators that have made their way in, thank you again. Appreciate your support. And thank you to all the loyal subscribers that have made their way in and continue to support the channel and the message every Friday. This live stream not going anywhere. It's one of the most enjoyable 2 hours of my week, talking about my very favorite topic. And I'm just glad as hell that you guys are relating with the message, perhaps maybe even dare to share the message with the folks, bring them into the community. Let me put them in front of me. Give me a chance. Give me a chance to talk to some of these folks who may not have had the opportunity to invest in their life. And that's the, I'm kind of joking with Jason and JMac Investing and some of these other channel creators, but the reason why I support you guys so much is because if you can influence just one person, then you're aligning with my goal on my channel. And that I'm very serious about that. If you can say something, or you can, say something about how you did a particular investment, or you portray yourself to where somebody looks at you and relates with what you're saying, that's all about it. I'm all about that, guys. And that's really, I wasn't a YouTube fan. I wasn't a social media fan up until about 3 years ago. To be quite honest with you, I still have the same reservations that I had before because I'm a fairly private guy. But as far as this goes, as far as the power of reaching people, I think that's exactly what we're doing. And again, for the loyal subscribers on the Independent Investor channel that help us support the message, thank you from the bottom of my heart. I really appreciate it. We will be tuning again next Friday. So stay tuned. We've got a Sunday upload coming on the another portfolio video. It's on the first trade portfolio review, only about $5,000 in there. I think a lot of people do appreciate that because it just goes to show everybody's at different levels. You know what I'm saying? Trying to get to that first 10 or 25,000 bucks, in their life. Maybe some of you guys are working with much more than that. It doesn't matter. You got to take a relative perspective to the market. And if you're new or if you're a seasoned investor, there's a lot of benefit that can be had by gaining a lot more awareness to your ability in the stock market. And a lot of us can help. All right, guys. So with that said, I will be signing off. You guys have a great next to the weekend. And I will see you guys next week for a live stream number 59. Guys, take it easy. We'll see you next week.